How to avoid the crash. Here's how to avoid getting crushed in this car market crash. First, use the dealer's inventory glut as your bargaining ace. With 3.1 million unsold cars sitting on lots, 30% more than last year, you have the upper hand. Dealers are desperate to move vehicles, especially those sitting for over 60 days. One buyer in Texas waited until the last day of the month, when sales quotas were due, and offered $5,000 below sticker on a Ford F-150 that had been sitting for 87 days. The dealer accepted because floor plan financing costs were eating into profits. Timing matters. End of month or end of quarter deals often yield the best results. Always check how long a car has been on the lot. Anything over 60 days gives you leverage. Next, focus on timing your purchase strategically. The best time to buy in 2025, late summer. August and September are when dealers scramble to clear out old inventory before next year's models arrive. Discounts peak during this period, especially on slow-selling models. For example, the Dodge Charger currently has a 312-day supply, nearly a year's worth of inventory, while the Lexus GX has only 24 days supply. Target vehicles with high inventory levels where dealers are eager to move metal and cut deals. When it comes to financing, ditch traditional options if you can. With average rates at 7.2% for new cars and 11.4% for used, alternatives like credit unions can save you money. Credit unions often offer rates 1 to 2% lower than big banks. For instance, one buyer in Ohio secured a 5.9% rate on a used Honda through a local credit union, compared to Chase's 9.5%. Manufacturer captive financing is another option. Companies like Toyota Financial are offering 0% deals on slow-moving models to clear inventory. Just be cautious. These deals often require excellent credit and large down payments. Leasing, while less attractive than it used to be, can still work in specific cases. Some luxury brands are subsidizing leases to keep sales numbers up. For example, we found a BMW 3 Series lease for $499 per month with $3,000 down. Cheaper than buying at current rates. However, leases come with restrictions like mileage limits and wear and tear penalties. And with used car prices fluctuating, buying out your lease could backfire if the residual value ends up higher than the market price. Another key strategy is targeting undervalued models. While most cars are overpriced, some still offer decent value. The Hyundai Elantra and Kia Forte, for example, have lower markups than competitors. Subaru Outbacks are holding their value better than most SUVs. Avoid anything with a market adjustment fee. 82% of buyers paid over MSRP last year, but you don't have to. Use tools like Kelley Blue Book to identify fair prices before negotiating. Small differences in brand popularity can lead to big savings. One buyer in Florida saved $4,200 by choosing a Mazda CX-5 over a Honda CR-V. Both are similar in size and quality, but the CX-5 had $3,000 in incentives, and the dealer knocked off another $1,200 to match a competitor's price. Meanwhile, the CR-V was marked up $2,000 with no discounts. Researching incentives and comparing similar models can make a huge difference. Whatever you do, avoid rolling negative equity into a new loan. The average trade-in is $6,838 underwater, meaning you'd start a new loan thousands of dollars in the hole. One Reddit user shared how rolling $8,000 in negative equity turned a $35,000 loan into $43,000, with payments so high they had to skip meals to afford it. If you're underwater, keep driving your current car until the loan balance drops below the car's value. Don't overlook insurance costs either. Premiums jumped 19% last year, and they can vary significantly between models. For example, a $25,000 Honda Civic might cost $200 per month to insure, while a $28,000 Subaru Legacy could be $140. That $60 monthly difference adds up to $720 annually, enough to impact your budget and potentially change which car you can afford. Always get insurance quotes before committing to a purchase, if you can consider delaying your purchase. Tariffs are expected to push prices even higher, but the resulting sales slump could force dealers to offer discounts later. Goldman Sachs predicts 15.4 million sales this year, the lowest since 2009. When dealers get desperate, deals follow. Set up price alerts on sites like AutoTrader and be ready to act when a good deal appears. For used cars, certified pre-owned (CPO) programs are your safest bet. These vehicles come with warranties and inspections, reducing your risk. A 3-year-old CPO Toyota Camry with 36,000 miles often costs $10,000 less than a new one while offering nearly the same features. However, avoid high-mileage luxury brands. Repair costs on a used BMW or Mercedes can quickly outweigh any savings. If you must finance, keep the loan term short. The average loan now stretches to 72 months, but that's a trap. A $30,000 car at 7% interest for 60 months costs $6,300 in interest. Stretch it to 84 months, and you'll pay $9,100, almost $3,000 more. Plus, you'll be underwater for years. Stick to 60 months or less to minimize interest and avoid negative equity. Keep an eye out for repossession deals. Banks are repossessing cars at record rates, 1.5 million in 2024 alone. Many of these vehicles end up at auctions, where dealers buy them cheap. One buyer scored a 2022 Chevy Silverado with 22,000 miles for $28,000, $10,000 below market because it was a repo. Just make sure to get an independent inspection first, as repossessed cars often have hidden damage. Finally, think outside the dealership. Private sellers are often more flexible on price. For example, we found a 2019 Honda Accord listed for $18,500 by a dealer and the same model for $16,200 from a private owner. Just be cautious. Get a pre-purchase inspection and run a Carfax report to avoid salvage titles or odometer fraud. By following these strategies, you can navigate the current car market with confidence. Whether you're negotiating with a dealer, exploring financing options, or timing your purchase for maximum savings, the key is preparation. Use the tools and tips we've shared to make informed decisions and avoid costly mistakes. The auto market is heading for its worst crash since 2008. Tariffs are driving prices up 25%. $1.7 trillion in auto debt looms large, and dealers are stuck with unsold cars. If this video helped you avoid traps like negative equity or dealer markups, hit like and subscribe. We simplify complex money issues so you can dodge financial pitfalls.